Good afternoon, everyone. Thank you for joining today's Q&A session addressing the recently released Paycheck Protection Act loan forgiveness application and the related instructions and partial guidance. I'm Bob Sharon, partner in charge of Friedman LLP's tax department with more than 35 years of experience in public accounting, and I will be moderating today's program. While many of you have been in the workforce for decades or involved in a long-standing business like Friedman, that have been around for nearly a century, these are unprecedented times for all of us who have never experienced a global health and economic crisis of this magnitude. The coronavirus pandemic continues to send shockwaves throughout the world economy, business community, and families across the globe. Our thoughts are with all those who are suffering, and we continue to wish for the well-being and safety of you and your families. In response to the pandemic, Friedman has formed a COVID-19 task force of dedicated CPAs and advisors to keep you up to date and informed of the various programs and measures put in place by federal, state, and local authorities, as well as taxing authorities, and how these measures can benefit you and your business. As always, we are here to offer guidance and support, and will continue to do so as the situation evolves. We received almost 200 questions in advance, and we will be addressing your most frequently asked questions and concerns today. And at this time, I'd like to introduce my fellow colleagues who will tackle these questions. Mike Greenwald, partner and business entity tax practice leader in a career spanning more than 35 years. Mike has served a wide range of service and manufacturing and distribution and industries. He is also a member of the AICPA Executive Tax Committee. Joining Mike is Mike Sacco, partner who provides accounting, auditing, and business advisory services to numerous privately held companies and their owners. Mike has more than 20 years of experience and is instrumental in helping clients develop strategies that lead to sound financial decision-making. At this time, I will turn the program over to Mike and Mike. Gentlemen.
All right. Thanks, Bob. Really appreciate it. Thank you, everybody, for joining in. With the understanding that everyone wants to maximize forgiveness, borrowers now have official guidance. There's an application form and detailed instructions regarding the PPP loan forgiveness. I'm going to run through some of the eligibility and some of the other things that were in the guidance, and then I'll pass it off to Mike partway through, and we'll answer your Q&A. The SBA is looking to issue more guidance to further assist borrowers as they complete the application, so we'll hold tight for that. Lenders are also going to receive further guidance on their responsibilities. The applications require the borrower to make several certifications. It also provides standardized worksheets for some of the more complicated forgiveness calculations. Let's go through some of the CARES Act language as it is today, and let's start with the eligible expenses. So payroll costs up to $15,385 per individual, which is 8 weeks of the $100,000 cap. Active partners and LLC members may also be included, subject to the same $100,000 limitation, but based on 2019's self-employment income. Included in the instructions is the requirement that compensations paid to owners be identified separately from the employee payroll costs. The certification included in the application notes that the borrower must certify that to the extent the borrower has owner employees or is a self-employed individual or general partner, compensation claim for forgiveness for those members does not exceed 8 weeks worth of 2019 compensation, capped at $15,385 per individual. So that's very important. It's based not necessarily off of what you're making in 2020, but you have to look at your SE income from 2019 if you're a partner or an LLC member. This certification requirement could limit the claim for forgiveness and for other compensation paid to the owner employees in 2020, such as discretionary bonuses, if less or no compensation was paid to the owner employee in 2019. Okay. So in addition to that, right, we have the covered benefits for employees. So healthcare expenses. So for employees, healthcare expenses are included. For partnerships, it's only employees, not partner healthcare. We are not clear on owners yet for corporations, S corps and C corps. Retirement contributions, same thing. Good for employees. For partnerships, it's only employees, not partner retirement benefits. And we're not clear on owners for S corps and C corps yet. We wait for further guidance for that. State taxes imposed on employee compensation, such as unemployment insurance premiums, would be included in the calculation on forgiveness. Interest on mortgages in existence before February 15th is also an eligible expense. Rent on personal property with the lease in force before February 15th, 2020. So the application instructions provide guidance for determining what lease-related costs qualify as forgivable under the CARES Act. While noting that only 25% of the amount claimed for forgiveness can be for eligible non-payroll costs, the instructions introduce new guidance that a borrower can treat lease payments on leases for personal property as non-payroll costs eligible for forgiveness. Previous guidance described lease payments for real property as non-payroll costs that would be eligible for forgiveness, but had not specifically addressed personal property. This guidance addresses a great question for borrowers who are faced with continued lease payments for equipment, some of which may sit dormant, right, over the past few months, in addition to building rent. The SBA's clarification indicates that borrowers can treat all required payments during the 8-week period made on personal property lease obligations that existed prior to February 15, 2020 as eligible for loan forgiveness. As a result, borrowers should consider whether they have any computer equipment, copiers, auto or other personal property lease obligations for which they could claim forgiveness. Borrowers should take steps to ensure that they maintain copies of the current real and personal property lease agreements, receipts, canceled checks for costs paid within the 8 weeks. Borrowers must also maintain proof that the lease arrangement existed prior to February 15, 2020. The application's instructions note that these documents will be required to be submitted with your PPP loan forgiveness application. So it's very important to aggregate this information and have it ready to go when you have to submit your application. Utilities is an eligible expense. Utilities for which services began before February 15, 2020. That includes electricity, gas, water, telephone, internet, and transportation. Unfortunately, the statute uses the word transportation without further elaboration. So we wait for further guidance from the SBA on transportation. Borrowers can use the money to pay an eligible expense. Interest on debt obligations outside of a mortgage interest is an eligible expense, but it won't be considered for forgiveness. All right. The Act does not list any other expenses in the section entitled allowable uses of the covered loans. So that's your eligible expenses, what we just went through. You should accumulate support for 8-week expenses incurred on payroll and non-payroll. Draw the funds, if you can, from a separate bank account to help track expenses. Page 10 of the forgiveness application, which is posted on our website, has a list of the required documentation that is to be submitted. But again, it's payroll records, your leases, your lease payments, your utility payments. It's creating backup to support the amounts that are on your application. We know the CARES Act uses terminology, costs incurred and payments made during the covered period. So let's go through the calculation of payroll costs. All right. The instructions clarify CARES Act language allowing PPP loan forgiveness of payroll costs that are incurred and paid during a covered period, indicating that payroll costs in the form of wages are incurred when such wages are earned, and that when they are paid, when the payroll check is delivered to an employee or upon initiating an ACH transfer of wages into an employee's bank account. Furthermore, forgiveness is available for wages earned but not scheduled to be paid during the covered period or during an alternate payroll covered period, so long as those wages are paid by the borrower on or before the next regular payroll date. So we'll get to that in a little bit. The SBA also reiterates that the total amount of cash compensation eligible for forgiveness cannot exceed the prorated annual value of $100,000, which translates into the $15,385 during the 8 weeks. When applying for PPP loan forgiveness, the borrowers with a biweekly or more frequent payroll schedule may choose between 2 8-week periods for which forgivable payroll can be quantified. The first option is use the covered period, which is the 8-week period commencing on the date the borrower's PPP loan was dispersed, or option 2, use an alternative payroll covered period, which is the 8-week period commencing at the beginning of the borrower's first full pay period following the PPP loan disbursement date. The option using the alternative payroll covered period provides relief to borrowers who maintain biweekly or more frequent schedules, these borrowers were otherwise faced with increased administrative burden of having to create a special payroll. So many borrowers can now choose to better align their payroll costs with their actual payroll periods. Let's go through the calculation of non-payroll costs. The guidance does make a distinction in how non-payroll will be calculated in comparison to payroll costs. In the case of non-payroll costs, including real or personal property lease payments, there is no alternative coverage period. Forgivable expenses that are not payroll costs, including covered mortgage obligations, the rent obligations, and utility payments, must be paid within the 8 weeks or incurred within the 8 weeks and paid on or before the next regular billing cycle, even if the billing date is after the 8-week period. Following the new guidance, real or personal property leases that are paid by the borrower in arrears on or before the next regular billing date following the 8-week period may therefore still be eligible for forgiveness, even though such payments occurred outside of the 8 weeks. For example, assuming that June copier lease payment are billed and due in July, a borrower whose covered period ends on June 30th would still be eligible to claim forgiveness for the June copier lease payment that was made in July. All right. At this time, I'm going to hand it off to Mike Greenwald. He'll go through some of the still unanswered questions, unfortunately, and walk you through some of the forgiveness calculations. Mike?
Thanks, Mike. And again, thanks to everybody for joining us today. We certainly hope you and all of those close to you are well and safe and remain that way. As Mike said, there are still a lot of unanswered questions, even with this guidance. And the SBA and Treasury Department have acknowledged that and said that they're going to come out with additional guidance. But here are the kinds of things that we don't have answers to. So retirement benefits is the biggest single question we've been getting. You know, when it says right now, the application for forgiveness says retirement benefits paid. It doesn't specify a period. It doesn't say whether it's the 8-week period. It doesn't say whether it's 2019 or 2020. So the question is, can I make my, if I still have an outstanding retirement benefit payment that I have to make for 2019, and I make that during this 8-week period in 2020, can I count that as part of my forgiveness amount? And the answer to the question is we simply don't know. The advice that we're giving to clients is be prepared to make it. If you've got the obligation and you have the ability to make it, and it's possible it might count. But there is no guidance on that at the moment. As Mike said, there's no guidance as to who's considered an owner for purposes of the prior guidance that said that owner benefits don't count for purposes of forgiveness. Similarly with bonuses, a lot of employers have been eager to pay bonuses to their employees during the forgiveness period, if nothing else, than to use up the 75% that's allowable or required as payroll costs for the forgiveness calculation. But the question is, if I pay a bonus, let's say I pay an employee a $1,000 bonus, is that treated as $1,000, or do I have to annualize that now? Am I going to trip over perhaps the $100,000 limitation? So again, there's no guidance on how to treat bonuses. There's no guidance on financing leases. I, may lease my computer equipment on what would otherwise be treated as a financing lease. I pay X amount per year for 3 years, and I can buy the computer for $1 at the end when it's pretty much worthless anyway. So the question is, does that financing lease, is that payment on the financing lease eligible for forgiveness? Because it might not even be denominated as rent in the agreement. It might be treated as a capitalized lease, and it might simply say interest and principal. So how is that going to be treated? With utility payments. Yeah, go ahead, Bob.
If I can interrupt you on that, because we just got a question on that particular point. If in fact the capital lease does not qualify as a bona fide lease, might the interest expense portion qualify as mortgage interest deduction?
Well, if it's considered a mortgage, and that's the question, is what is considered a mortgage on personal property is generally a state law question. So it certainly would be considered interest, which would be an allowable expense, but unless it's considered a mortgage on personal property, it wouldn't be considered a forgivable expense. So, again, this is the kind of clarity that we're looking for. We're looking for clarity with respect to prepayments. Again, it appears as though any prepayments would not be allowed because it's only payments for the 8-week period, but conceivably I could have 3 rent payments that come due during the 8-week period, depending upon how my lease is drafted. So could I get a prepayment included in my forgiveness amount? And the last and biggest question in my mind is, suppose the 8-week period ends after June 30th. There's language in the statute that says that allowable expenses are only for the covered period, and covered period for that definition was February 15th through June 30th. So am I even allowed to spend the money after June 30th? And if so, what can I spend it on? And will it be included in the forgiveness calculation? So we need some clarity on that. The forgiveness calculations we've gotten some clarity on that. So we now know that the wage reduction, remember the way the forgiveness works is you first figure how much of your expenditures are eligible for forgiveness. So let's assume that you're the perfect borrower and you spend 75% of your funds on payroll, 25% on eligible non-payroll. So you're in a position where 100% of your loan is forgivable. Now, that there are some formulas that say that if you reduce wages by a certain amount, or if your head count is reduced by a certain amount, that will reduce the forgiveness amount proportionately. So we now know that the reduction in wages comes first. So you have to look at your employees individually, determine whether you have that 25% or more forgiveness, annualize that, and figure out the effect of that on your forgiveness calculation. You then look at the reduction in FTEs and look at the safe harbor for that. And again, you can compare your FTEs to 2 different periods. It's either February 15th to June 30th, 2019, or January 1st to February 29th, 2020. Compare FTEs to that and see whether you have an actual reduction during the covered period. Now, bear in mind that FTEs for this purpose, as we were going through the process, we thought it was going to be a 30-hour per week FTE equivalent. It's now a 40-hour per week FTE equivalent. However, there is a simplified method for looking at that as well. You can count any 40-hour per week employee, 40-hour per week or more, as one full-time equivalent, and anyone who is less than 40 hours per week as half of a full-time equivalent. That simplified calculation, particularly if you have a lot of different employees who work different kinds of hours, some work 5, some work 10, some work 20, rather than doing the calculations employee by employee, you can simply take that half employee for all of them. Now, the other thing that was going on is the cure period. And as we know, there's a cure period for both the wages and a wage reduction, as well as a cure period for the FTE reduction. And one of the questions that we had leading up to this, the statutory language said you had to cure it, by June 30th, but it didn't say what happened, or if you had hired those people back and then let them go before June 30th. Based on the instructions, it's now clear that if you're going to hire those people back, it has to be through June 30th. So the count is going to be as of June 30th. The way this is going to work is if you had a reduction in force between February 15th and April 26th, which was 30 days after the loan was passed, after the bill was passed, you can bring those people back. You can bring back that count by June 30th, and you won't have to look at the reduction in employee count in terms of reducing the amount of your forgiveness. Now, we still don't know precisely if it has to be the same employees. It doesn't read that way in the instructions, but what we do know, based on guidance previous to the instructions, is that if you offer those people that you let go, if you offer to hire them back and you make that offer in writing and they refuse to come back, remember you need this documentation, you make the offer in writing, they refuse to come back, you can count them as part of your cure factor, even if you don't actually rehire them. Now, there's a second order issue with that. and that if you don't rehire them, they're not getting paid. And so the question is, will you have spent enough of the funds to have all of your loan forgiven? But at the very least, you can satisfy the cure for the percentage reduction. Take a breath. Now, one of the other things
Mike.
Go ahead, Mike.
No, I was just going to add to that. One other thing, you mentioned that the good faith offer that you made, but there's also in the act, it basically says any employees who are fired for cause, voluntarily resigned, or voluntarily requested and received a reduction of their hours during the covered period or the alternative payroll period. That also wouldn't affect your calculation.
Thanks, Mike.
Yep.
Anything else on that, by the way, that you wanted to cover?
No.
Okay. Now, we've had a number of questions about the 8-week period. And I want to be clear that at the moment, the 8-week period starts on the day you receive the loan. The only variance from that is what Mike pointed out in terms of the alternative covered period for payroll and the fact that you can pay an expense that relates to the covered period after the covered period ends. There is a bill that passed the House of Representatives that is sitting somewhere in the well of the Senate that would provide for a longer period to spend the money. First of all, the likelihood of that bill passing the Senate is somewhere between 0 and none, certainly in its current form. But the second thing is that by the time it would be passed, most of you in this audience, most of the clients that we've dealt with would have already been through the period, the 8-week period, would have spent the money and would probably already be applying for forgiveness. So I wouldn't be out there counting on this as relief at this point. It's not something that I think you should try to rely on. One of the things that we do know is that the IRS has said that any deductions, any expenses that you pay with a forgiven loan won't be deductible for federal income tax purposes. That's currently their position. We know that there are members of Congress who are also trying to change that. Again, I wouldn't be sitting here relying on the fact that forgiven expenses will be deductible. Similarly, there are going to be lots of issues with the states because not all the states may allow the loan forgiveness amount to be excluded from income. But then in theory, if the amounts are not excluded from income on the loan forgiveness, then presumably for those states, you'd be able to deduct the expenses. So just for the record, 2020 tax returns are going to be very complicated based on all these different rules for the PPP loans. So I just want to get on to the questions because there's a lot of them. Yeah. We had 200 before. We've gotten another, 91 plus a bunch in the chat. Yeah. Don't put your questions in the chat. Put them in the Q&A because we won't find them in the chat. But it's clear that the rules for loan forgiveness are still a moving target at this point. We have the statutory language in the Act, which is very explicit about loan forgiveness. But we have the SBA and the Treasury that are, as they did with loan sizing and other guidelines, are causing differences in the application of the statutory language. So it's not entirely clear that the rules that we're presenting today are actually going to be the final rules when you go to apply for loan forgiveness. The one thing I want to reiterate that Mike said before is now is the time to start collecting documentation, because the one thing we can be certain of, because it's in the statute and because it's very clearly reiterated in the instructions to the forgiveness application, is there's going to be a lot of documentation that's required to be submitted to support the forgiveness application, whether that's copies of mortgages, copies of leases, copies of utility bills and canceled checks, payroll records, all of these things. You need to start being in a position now to have these documents available. Remember, most of us are working in an online environment where we might not have ready access to papers. You may want to start figuring out from your vendors, from your payroll providers, from your banks and your lenders, exactly how you're going to get the documentation to be able to support everything that goes into the application. So if I have one word of advice beyond anything else, now is the time to start preparing that aspect of the forgiveness application, because that's going to take some time to get done. And with that, I'm going to turn it back to Bob, who's going to start throwing your questions to Mike and me. And if he says, Mike, what do you think? It's easy.
Either Mike. Either Mike. So we're up to 326 questions now. I'm going to do my best to ask questions that are either different or slightly different than the materials you both have already covered, which was extensive. So let's start with, what is the guidance on usage of PPP funds for owners' benefits?
So what we do know is that on the healthcare side and the retirement contribution side, for partnerships and partnerships and LLCs, it's only for the employees and not for the partners or the members. We are not clear yet as far as corporations, S corps and C corps, as far as their shareholders are concerned.
Right. And the question is also, maybe you can use the PPP loan funds for that, but you might not get that part forgiven. So again, we got to remember there's two aspects to this: what costs are allowable and what expenses are forgivable. And those are two separate categories.
Do Schedule C owners have to actually pay themselves?
No, the loan forgiveness, at least according to what we've seen so far, is just going to be based on the loan amount, which was based on the 2019 Schedule C that was submitted with the loan application.
Would storage unit rent be eligible for forgiveness?
So I think it would have to have a lease with the word rent in it. I know a lot of our clients have warehousing that they pay that stores inventory. I don't know necessarily if that warehousing agreement is a rent or is it warehousing costs where part of it is storage. So I think you have to look at the agreement and see if there's a rent component to whether you're renting part of a warehouse or you're actually just have a warehousing arrangement.
If I have a Schedule C loss for 2020, can I still take forgivable distributions?
Well, again, the forgiveness amount is going to be based on what you submitted with the 2019 Schedule C. So I don't think the 2020 loss is going to affect it one way or the other. And it's not based on the distributions. It's simply based upon the amount of 2019 self-employment income that you used to support the loan in the first place.
Does rent paid to a parent multi-member LLC qualify for forgiveness?
So, okay.
I was going to say, one of the things that we don't know is what happens with related party payments in general, whether it's rent, whether it's interest expense on a mortgage from a related party. We're assuming, because no one has brought it up in any kind of guidance, not in the statute and not in any of the IFRs that have been released up until now, and not in the application itself, that the concept of related party is irrelevant for this. What is relevant is that you have documentation. So the question there would be, do you have an actual lease with your parent multi-member LLC? If you don't have a lease document dated before February 15th, 2020 or before, then you're not going to get forgiveness on it, whether you pay the rent or not.
Are FICA and Medicare payments included as payroll?
No.
I don't think they are.
No.
The employer portion are not included. No.
Also, can 1099 staff be used for the forgiveness calculation?
No.
Nope.
When you're figuring out these expenses, cash or accrual basis for the loan forgiveness?
So they have to be paid. Has to be paid within the 8 weeks. So cash.
Cash. How about guaranteed payments? Are they considered payroll?
No. The partner compensation, if you will, that's going to be used for purposes of loan forgiveness is going to be the self-employment income that was shown on the 2019 Schedule K1. So if guaranteed payments are included in the self-employment income, then they would count. But guaranteed payments in and of themselves are not payroll.
What about if a business is currently closed because of the pandemic? When does the 8 weeks start?
It's unfortunately it starts once the money is deposited into your bank account. So even though you're not open, it's unfortunate, but the clock starts as soon as the funds are transferred to you.
Can wages paid during the 8 weeks be greater than the average wage paid the employee in 2019?
It just says it can't be less. But again, you have to be cognizant of the $100,000 annualized limit. So essentially for any given employee, the most it could be during that period is $15,385. So yes, it could be more up to that cap.
Right.
So if I'm an owner and I took $40,000 of payroll in 2019 and I want to take 80,000, I can count 80,000 for the 8 week period, prorated for the 8 week period?
You can. The question is whether you should. Now, again, most of these loans are below $2 million, and they're not likely to be examined in any great detail by the SBA. But, if you fired all your employees, and you pay all the PPP loan money to yourself, and then you bring back all your employees June 29th for 2 days, and then fire them all July 1st, you're going to have some questions asked by the bank or by somebody as to whether you've really appropriately used the loan funds. Now, that's not to say that there isn't some reasonable basis for increasing your own pay. But again, think about whether that's why you got the loan in the first place.
If you don't spend 75% on payroll, is it all or nothing? If you spend 50%, will rest be treated as a loan?
So it's not all or nothing. If you don't spend 75%, a portion of your loan will not be forgiven. It's not that the whole loan then is not forgiven.
Right. So, for example, if you borrowed $1 million and you have payroll of $600,000 and non-payroll of $400,000, the maximum loan forgiveness is going to be $600,000 divided by 0.75 or $800,000. So that's the maximum amount you could forgive. So it'll be 600 of payroll, 200 of non-payroll, and then 200,000 of non-payroll will be a non-forgiven loan. That's the way that'll work. So until further notice, it's not a cliff. That's our understanding of it.
Are employees who have voluntarily left factored into the FTE reduction of headcount calculation?
Bob, you said if they voluntarily leave, you said?
Yeah, if employees who have voluntarily left, are they factored into the FTE reduction calc?
No, that was clarified in the latest guidance that came out. There was a FAQ that came out about offering in good faith to rehire someone, and then there was also an additional one that basically said any employees who were fired for cause, voluntarily resigned, or voluntarily requested and received a reduction in hours during the period or alternative period won't affect their forgiveness.
Here's a good question for you, Mr. Sacco. Will I be able to prepare forgiveness calculations without professional help?
There are some companies that have, the skill set, CFOs, maybe controllers that have the capability to do it, but it's always recommended to consult with your professionals, your accountants and your attorneys when you're handing in an application or something like this. So I recommend reaching out.
Should I expect an audit by the SBA?
Well,
look, I think
go ahead. No, go ahead.
I was just saying, I think if your loan is over $2 million, you have a chance of being audited. I think a greater chance over $2 million, and I think maybe I don't know if they're putting it into buckets above $2 million, but I think the higher amount your loan is, I think the greater chance you have of being audited.
If you spent the money on a Rolex and a Rolls Royce, yeah, you can expect to be hearing from
Yeah.
either the FBI or the SBA. Otherwise,
Or both.
otherwise, as Mike said, if it's under 2 million, probably not. If it's over, yeah. But on the other hand, and there's been a lot in the press, and there's been a lot of political chatter, and if you borrowed the money in good faith, and you really do have economic uncertainty, and you really spent the money the way the law suggested that you should spend the money, and you really meet all the criteria for forgiveness, then whether the SBA looks at the forgiveness application or whether they look at the loan after the fact really shouldn't be troublesome. The issue is they're looking for borrowers who did not act in good faith, or borrowers who spent the money inappropriately. They're not looking for real businesses that really use the money the way it was intended to be used. And that's, at the end of the day, if you can sleep fine at night, then you really don't have anything to worry about with respect to an SBA examination.
Can PPP proceeds be used for paying off mortgage principal?
It's not an allowable cost. So, it's an open question. It's certainly not a forgivable cost, but it's also not listed as an allowable cost. Interest is, principal isn't.
How about using PPP proceeds for paying payroll that was incurred prior to funding?
I don't think well, I think it depends, right? So if you look at the alternative payroll periods now that they've offered you to use, so you don't have to run a special payroll, there could be a situation that you've incurred payroll prior to the 8 weeks. You're paying it in the 8 weeks. I think it depends on how you align your payroll. But the idea is that you're going to, from what it looks like from the guidance, it's going to be 8 weeks of payroll. But again, you have to look at the two alternatives that you could use, the two options, I'm sorry. And one of them starts when your money's deposited into your account, right? And then the other one is when your first payroll starts. And it's basically all about aligning your payroll cycles with the 8 weeks.
Does it matter if employees at the end of the period are different than those employed at the beginning of the year?
I don't believe there's a difference.
It doesn't say anything.
Yeah. I think you touched on this, Mike, but rehires, if they only are restored for 1 day prior to June 30th, is that okay?
Technically, yes. But again, the question is, will you have enough expenditures, enough qualifying expenditures for the loan forgiveness in the first place?
Can I return the funds without penalty?
Yes. Right. I believe that there's been, the date, I forget the exact date that I know they extended it.
I think it was today.
To return,
Yeah. Yesterday.
Yesterday.
Yesterday. You're able to, right.
But even if it's tomorrow, even if it's next week, I don't think it's, right. They're not going to say no.
Right. They'll take their money back.
Question, do you have to repay the interest on the loan even if the proceeds are all used for valid business purposes?
I'm not quite sure.
Clear on that yet. Yeah. Because you could defer the interest for 6 months, right? So the question is, if you have everything forgiven, do you owe any of that interest? I think you have to look at the note agreement with the bank that you have and see really how your interest payment would be taken into account as it relates to the forgiveness.
And let's assume for the moment that you spent all the money on allowable costs, but none of it was forgivable. Then in theory, you'd have you're fine because you spent it all on allowable costs. You have a $2 million loan. You have the interest is going to accrue, but you have a 6-month deferral on payment, and then you're going to have 1%, on that for the balance of the 2 years. But the likelihood of that happening is small.
Can you elaborate on what is included as utilities?
Yes, I can. Utilities are electricity, gas, water, telephone, internet access, and transportation.
So it's interesting. So people, when they say gas, it's not gasoline necessarily. That's talking about gas, heating and the like. We don't know what's included in transportation. We also don't know, for example, in New York City, is paying for trash pickup considered a utility or not? All these other costs that might be peculiar to doing business in New York City that we commonly would think of as a public service or utility or something like that might not be.
Mhm.
So, but
Right.
transportation is the big open question.
Yeah. Yeah. Also, when you think of that, some utilities that may be included in your lease agreement, right, with your building. We talked about this briefly the other day about what if when you look at your lease, if it's broken out with taxes or property taxes are part of your lease, it's not, if it's specifically broken out, it may be something that's not part of your rent to be used in the forgiveness calculation. So you have to look at your leases and how it's broken out in the lease and in your invoices.
Do you have an opinion on the New York City rent tax? Would that be considered rent? I don't think so.
Oh,
It's one of our questions.
yeah.
I don't believe it would be.
No,
It's
I
not
don't
part
think
of a lease. Right.
If it becomes a 2-year loan, can it be used for any purpose?
Well, that's one of the interesting things about the way the statute itself is drafted. The statute says that there are certain allowable expenses during the covered period. And for this purpose, covered period is defined as February 15th to June 30th, 2020. So the question that raises from a English language standpoint is, does that mean that after the end of the covered period, you can spend the money on anything? Or does it mean that after the covered period, you can't spend it on anything? And that's not at all clear. But what is clear is that during that period, which also includes the 8-week period of the loan, those are the only things you can spend the money on. And so I would say that someone who's being conservative with respect to this would limit their expenditures to those amounts.
Is there any requirement to retain employees past June 30th?
As of now, no. Nothing in the act or the updated guidance or the FAQ says that you need to have anyone beyond that June 30th cure date.
We had a lot of questions about the application in terms of what about items that you calculated in applying for the loan that do not happen in the 8-week period after funding?
Such as?
Well, I guess rent or utilities, or maybe you overcalculated.
The only thing you calculated when you applied for the loan was payroll.
Mm-hmm.
That's where the 75% came from, because don't forget the loan amount was based on 2.5 months, but the spending period is 8 weeks. So that's where the SBA derived their inference that you are required to spend 75% of the loan proceeds on payroll. They inferred Congress's intent to be that. Congress never said that. In fact, Congress says that wasn't their intent. But
can I use the PPP loan to give my employees a raise?
So, yeah, there's nothing in here that says that you can't increase payroll other than limiting everyone to the $100,000, $15,385 for the 8 weeks. But there's nothing in here that says that you can't, increase someone's payroll.
What about if the FTE level is higher than the level at the time you applied?
you don't get extra credit.
No extra credit.
No extra credit.
That would be good though.
Yeah, I'm sure the government would be very happy, but
Yeah.
When is the start date? The date of approval or the date of receipt of funds?
The date of receipt of funds.
A lot of people have asked, can we get an extension if we cannot open our business until June 14th?
Yeah, look, unfortunately, that's something that's, being debated and trying to be pushed through. But as of right now, no, the 8-week clock starts when you get the money. And, it's unfortunate for a lot of companies that aren't open, a lot of retail, a lot of restaurants and spas and everything else. It's terrible. But right now, it's unfortunately the 8-week clock starts I think the whole intent of the act was to keep people employed through the closures. But it is a burden on companies that are not open to have to use their money now.
When you annualized your highest pay period for the forgiveness ratio, how does a one-time bonus paid in the first quarter get handled?
So, Mike, that's in the forgiveness calculation where you're annualizing it, right? You're annualizing Q1 compensation versus annualizing the 8-week compensation. So I think you're annualizing it. So if there's a bonus in there, I think it would count toward the annualization in Q1.
It doesn't say that you get to exclude it at this point. Again, there might be further guidance.
Yep.
So here's a question that we've debated internally. What about subleasing? If you have rent and you're subleasing part of your space, do you count the full gross rent or the net rent after the sublease?
Again, there's no guidance at this point. If it were me, I would count the whole rent.
I mean, you're following your lease. You're following your lease payments. It's not asking you to net out your sublease, but it's not to say they won't add that or add an FAQ or address that when you apply.
If an employee is receiving severance pay, does he or she count in the FTE forgiveness calculation?
They're not an employee.
They're not an employee, right?
Even though they're getting pay.
Yeah, the pay counts, but they're not considered an employee.
Can deferred salaries from before the PPP money is received count for forgiveness?
So the problem is it's not incurred, right, in the 8 weeks. So it's paid. It's I don't think it's clear yet. I don't think that's clear how they would handle deferred comp.
I received my loan April 21st. Can I include the full expenses for the month of April?
It depends what you mean by the full expenses. But if, for example, you only pay your employees once a month at the end of the month, then in theory, you would get that full payroll amount at the end of the month, similarly with the rent. But you could still only get 2 payroll periods then. You'd get April and May, but you wouldn't get June. You'd get April and May rent, but you wouldn't get June. So you're still going to wind up with the same 8 weeks. It's just a question of when the timing, what period the payment is for. But it's not going to extend the amount of payments that you get to include.
But isn't it true in some instances you can get more than 8 weeks payroll, depending on how things fall? You might even get closer to 9 weeks or 9.5 weeks.
It depends on how your pay periods fall. It's possible.
Possible, but I wouldn't be surprised if that's clarified.
Yeah.
What if you have an auto lease, but it's not in the entity's name that got the money, it's in the owner's name?
I think you'll have a hard time arguing that that's eligible.
Yeah.
I think you covered this, but do retirement amounts only include those attributable to the covered period?
We don't know the answer to that yet.
We don't know. Right now, it's payments made. So technically that you could take that the way it's written, and if you have a 401k match, and include the whole match right now. But again, that's an area that needs to be cleared up. Because is the intent 8 weeks, or is the intent any 401k match for the year?
I didn't include my Schedule C income in obtaining the PPP loan. Can I now use that income, subject to limitations, when calculating the amount of forgiveness?
We think so. There's nothing that says you can't. It's still an open question, but there's nothing at the moment that says that you can't include that. The fact that you didn't borrow as much money as you could have doesn't mean that you're not entitled to ask for forgiveness for that amount.
Does interest on a general line of credit secured by business assets qualify as mortgage interest?
So it's an eligible expense, but not for forgiveness.
Yeah,
It has to be a mortgage.
yeah, again, it's a state law question. Does that constitute a mortgage for state law purposes? If it constitutes a mortgage, then it's forgivable. If not, as Mike said, it's just interest that's allowable, but not forgivable.
Okay, in the remainder of the time, we're going to now go into the 310 questions that we got in the last 50 minutes. I have not seen this or read them, so hold on, buckle up. Is 401k matching considered retirement benefits?
Yes.
If rent of prior period, if not paid earlier and is paid now, is it forgivable?
So the way it's written right now, if you have a rent, it is possible to pay, let's say you paid April, May, and June rent in your 8 weeks. The way it's written right now, that would be allowable.
I am a solo law firm LLC. I don't have a salary or payroll. However, I take distributions as needed, nothing set or regular. I use my average monthly distributions for my loan request. Being that I don't have payroll, what information and what documents will I need to provide to ensure my loan is forgiven? I was told this shouldn't be a problem.
It should be the 2019 Schedule C, or if there's a K1, the K1. Whatever shows the...
Right. And any utility payments or rent payments or anything else.
Right.
Are sales commissions eligible for forgiveness if in line with prior year's practice?
So if sales commissions are paid through payroll, then they would count. But if they're paid on a 1099, then they wouldn't.
Another clarity request. Expenditures are based on period incurred and not period paid?
Well, right now it's incurred and payments made, so it's both. But it's on the payroll side, they made it pretty clear that you can have certain payments made outside of the 8 weeks and count the payroll that was incurred within the 8 weeks. That was the alternative payroll option that they put out. But as far as rent and utilities and all that goes, that's payments made within the 8 weeks right now, the way it's written, not incurred, payments made.
A lot of these questions we did cover during the presentation. Couple of questions. Did I hear correctly that health insurance premiums that cover a partner do not qualify for forgiveness, even if it's part of the same invoice as employees?
Correct. Partners' health care would have to be backed out.
If my 8-week period is May through June, and I pay an internet bill in May that covered the April period, is that eligible for forgiveness?
Yes, I believe they clarified that in the new application and the guidance that came out last week.
What if employees ignore rehire emails? I don't think we can answer that one.
No, if you've offered them in writing and you haven't gotten a response, then you've met your burden.
Does the death of an employee impact the FTE count?
I don't know.
Impacts the employee.
Now, as far as we know, it should be, it shouldn't. It's not covered by the FAQ that covers voluntary, because it's certainly not voluntary. But it should be treated the same way. I mean, obviously, they're not going to be returning to work, so you should get the same. You should get the same grace for that.
Does vacation time paid count towards payroll if earned prior to the receipt of funds? What if earned after February 15th?
So if you've got accrued vacation that you're just paying out, The statute
I think
says
that would
that
be
it
okay.
counts. The statute says that it counts irrespective of when it's earned. But the question would then be, there's a possibility that they might change that when the final guidance comes out. But as of right now, it just says vacation pay. It's the
Right.
same issue as retirement benefits.
What's the earliest we can apply for forgiveness?
When you have all your expenses.
What, right. After your 8-week period and you have everything documented.
For a lot of people, it's not going to be till June 30th because they're going to want to take advantage of the cure period. You have to wait until June 30th to prove that you've cured the reduction in pay or the reduction in force. But if that's not an issue and you had no reduction in force or reduction in pay, then as soon as you've got 8 weeks of expenditures and you've got all the supporting documentation that's required, you can go ahead and apply.
And I'm sure the banks will reach out and create the outlet for you to apply and how to apply and what to include.
Mike Sacco, you mentioned that utilities were include internet. How about internet support costs?
It just says internet, so I don't believe that support costs would. I don't believe support costs would count.
I agree with
I
you.
believe it.
Not 100% certain, but
Yeah.
Hopefully we'll be getting more guidance coming out.
Yeah.
Is the IRS still planning to make forgiven loans tax exempt?
Well, it's not the IRS's plan. That's in the statute. The loan forgiveness is non-taxable per the CARES Act. What the IRS has done, though, is said, okay, that's fine. You don't have to pay tax on the forgiveness, but you don't get to deduct the expenses that were incurred with the forgiven money.
Right. And that's being challenged, right? People are fighting that in Congress now.
Well, Congress is
I
saying
don't
that
know if
wasn't
they'll
what.
win, but
Yeah, well, the only way Congress can win is to pass another bill, and they're not likely to do that anytime soon.
Are workman's comp and liability insurance included as a forgivable expense?
No,
no.
just the state charges that are based on payroll.
Just want to confirm that company health expenses for partners of an LLC are not eligible payroll expenses.
As of right now.
No. As of now, no.
Originally, interest on other secured debt, such as a credit line, was part of the forgiveness. No longer?
I don't think it ever was. I think it was always an eligible expense, but I don't think it was ever a forgivable expense.
According to the statute, it's mortgage interest, whether that's a mortgage on real or personal property. Mortgage interest is both allowable and forgivable. However, other interest on other indebtedness is an allowable expense, but not a forgivable expense. And that's in the CARES Act statute.
Is the payroll gross payroll or net payroll?
Gross payroll.
Suppose your 8-week period ends before June 30th. Is June 30th still the date you need employees on payroll for forgiveness?
Yeah, I believe for the cure period, yes.
Yeah. It's not for forgiveness. Yeah.
Right. It's for the cure. So if you meet all the other tests and you're fine and you don't need that cure period, then it's irrelevant.
In lieu of giving employees salary increases this year, we are considering giving one-time payments and doing that during the 8-week period so as to include for forgiveness. Would that payment be includable as a payroll cost?
So look, you're dealing with, so now it's something that you never did before, and now you're doing it in the 8 weeks. So does it raise a red flag? I think it does. But again, it's right now the way, as long as it's up to the $100,000 or $15,385, you're fine. But again, anything that you do that's outside of what you normally done, could be looked at. So just keep that in mind.
Are all employees have to be at 40 hours per week in order to be a counted employee? Question mark.
No, full-time equivalent is 40 hours, but you could have two people that work 20 hours each. That counts as one full-time equivalent.
Or you can use the alternative test, and anybody who
Right.
works less than 40 is considered half of a full-time equivalent.
Right.
What about real estate owners? Have you seen them eligible for the PPP loan?
It's been an issue. We do have real estate owners that we've seen who have gotten PPP loans. We have others that we've heard about, or banks that we've heard about, that are not making loans to real estate owners. So far, there's been a definite lack of clarity from the SBA on the question. As I said, we do have at least two banks that we know of that have raised the issue. One bank said flat out that they weren't making loans to real estate businesses, not property management, but real estate owners. Another bank said that they would make the loan if the borrower would certify that they were eligible. But every other bank that we are aware of hasn't raised the issue at all. So it's still an open question.
As we
What
now
about,
approach- Yes, go ahead.
I have a question that got texted to me. I just want to read it out. So a company uses temp service for payroll. Will that go through payroll forgiveness?
If they're considered their employees, you can use a PEO, you can use a temp service, as long as the temp service provides the documentation that they're considered your employees. What the government's concerned about is that both the temp service and
Both.
borrower are both going to claim those employees, and really only one can. Think of it like
Right.
custody in the case of divorced parents. Only
Right.
one of them
So if
gets the exemption.
Right. So if they're your employees, but you're using a PEO or a temp service, that should count.
We are already over our limit, so I'm going to end with an appropriate one question for both of you. Any chatter if accounting fees directly related to PPP for clients can be eligible for forgiveness?
That would be terrific, but we're always willing to, and you can prepay those as well if you want to. That's an eligible prepaid expense.
Sadly, there weren't enough accountants in Congress to get it included as either an allowable or a forgivable expense.
Correct.
Mike and Mike, I want to thank you both. I want to thank all our listeners. We received 559 total questions. Friedman will continue to monitor this situation and others, and we will put out alerts and do webinars if it is warranted in the future. And you can always feel free to reach out to us for any assistance we can provide. In the meantime, we hope you all stay safe. Thank you, everybody.
Yeah. Thank you.
Thank you.
Be well.
Thank you.